Hi, everybody. Jared Johnson here. Just wanted to give you a little market update. We're a couple days into the week. We've seen a few things happening in the stock market, but honestly, nothing too wild and crazy. Let's talk a little bit about what we're seeing here and what we need to be looking at. I hate to be a broken record, but there are a couple of important things we have got to keep an eye on. So let's go over here. Let's look at the VIX for just a second. Now, remember, if you guys have been kind of watching and following some of my posts, you'll remember that the VIX itself is this is our fear gauge, right? And really what this means is how many people are trying to buy protection against the market. This is kind of the insurance gauge, right? The higher the VIX goes, the more people want protection, the more fear there is. And there's kind of some long-term averages that the higher the VIX goes, the worse things tend to get above a certain level. And we have seen this level hold pretty well. And that's this guy right here, right in kind of the upper 20s is kind of our level that we don't want to see crazy things happen. I always like to point this chart out. Here's not COVID, right? We had a big panic in kind of the middle of last year. But we've seen the VIX kind of try to push some of these levels. And as long as it stays below our danger zone, we're in pretty good shape. And what's it been doing? Coming down pretty hard from that area. So it means that there's not a lot of interest in buying the VIX and protecting against too much fear, right? Against too much panic. So the VIX is looking good. Moving on to the next, let's look at the S&P or the SPY, kind of just see how this is looking. Couple of key levels here to make sure you keep an eye on. Remember, there's two levels to watch very specifically in an S&P market. It's the 10% correction and the 20% bear market, right? These charts are infamous for kind of testing that 10% level right on the nose and that 20% level right on the nose. If you guys go back here, if you remember going back to kind of 2018, we had a little bit of a sell-off here where interest rates were kind of trying to make a bit of a run. And let's just zoom that in a little bit there. This is kind of end of 2018. If you guys remember this, the S&P is doing great. Everything's kind of making its way. And we see these highs right here go down to these lows right here, just 20%, 20.5%. That was bear market territory, stopped right there, turned around, went straight back up again. So remember, we're looking at bear market, we're looking at corrective markets, and 10% is a corrective market. And we saw this kind of drop down right here. The S&P has dipped while the VIX has gone up, right? The S&P dips, and we see this 10% correction, and it's been coming up ever since, right? So at its worst point, the S&P was 10% off its highs. It's recovered to only being about 6% off its highs, so it's hanging in there. You can see the same thing in the QQQs, the NASDAQ kind of situation here. This went a little bit further. It's a little more volatile. Big tech got a little more hammered. This made about a 13% correction. But what did it do? In kind of the long-term move here, we see these big tests on the way higher. Big tests, right? And so we saw that kind of a situation happen here. This dipped a little bit below, but it seems to be making its way back up above the 200-day moving average and average price and so on. So we're seeing S&P, we're seeing the NASDAQ kind of hanging in there pretty good. Now let's move on to the next. We want to look at copper. Remember, copper is an important one. And copper, I like copper for a lot of reasons, but remember, I've been talking about copper is not something that runs higher like crazy right as we're headed into a terrible recession. Copper is a pretty good signal of people are feeling okay. They're buying, they're producing, they're manufacturing, and we got all this tariff stuff and everybody's panicked about it. Yeah, copper goes higher. Copper goes higher. Now, there's a couple of things to keep in mind about that, but let's just look at one in particular. And let's look at a couple of things on the charts real quick here. Copper is coming up to a big double top. This was a high of just about a year ago. We had huge runs on electronics and so on, and then we're right back to that level, right? Everybody saw Nvidia and all these other stocks going absolutely bonkers back here in kind of April, May, June of 2024, thinking, holy smokes, this will never stop going. We're right back to that, right? Does that feel recessionary to you? It doesn't feel super recessionary to me. If we go back and look at some copper levels, we're at all-time highs and it's pushing it. It's continuing to kind of push higher, make its way up just a little bit more every day. So it looks pretty solid. I think we're in pretty good shape there. Now, China obviously is a big copper kind of signal. China has a lot of their own copper. China does a lot with copper. So there is some implications there. But overall, we really don't see big copper rallies and recessions happening around the same time. So hopefully that's helpful. I'm still pretty optimistic on things. We're seeing the stock market recovering. We're seeing a lot of things holding pretty strong, pretty steady. I think we might be in okay shape. Hopefully we are. Good luck, everybody. Happy trading. Keep an eye on the posts, and I'll keep you guys updated as I see interesting things happening. Good luck, everyone. See you all.